Hey everyone, welcome to today's exciting session on investment opportunities and insurance. We're about to embark on a fun adventure in the world of finance, specially designed for our grade 12 students. Get ready to expand your money knowledge as we dive into different investment options. If you pick up something new, don't forget to like the video and share it with your friends. And be sure to check out the awesome study notes on this chapter in the link below. Let's kick things off. Investment opportunities offer a chance to grow your money over time. Consider it like this. Businesses invest in assets like buildings and equipment, or in financial assets like stocks and bonds. These investments can help them in various ways. Capital investments like buildings and machinery enable businesses to operate and produce goods or services for sale. Financial investments, such as stocks and bonds, can generate interest or dividends, which are a portion of a company's profits. Why should you invest? Here's why it's exciting. For individuals, investing can build wealth and create an income stream. This could be for future retirement, a dream vacation, or that coveted gadget. Businesses invest to make money and to expand their operations. They also use investments to handle unexpected situations and to increase their market share. A savings account is like a secure vault for your money at a bank. By keeping your money in a savings account, the bank rewards you with a little extra interest. Although the interest rate isn't typically very high, savings accounts are a reliable and safe option. They're handy for short-term goals, as well as for emergency funds in case of unexpected expenses. Investing in a savings account in South Africa is generally low risk, with a low return compared to stocks or bonds. However, savings accounts offer high security and stability due to government deposit insurance schemes like the Corporation for Deposit Insurance, which guarantees a certain level of protection for your funds in the event that the bank fails. The time frame for investing in a savings account depends on your goals. They're suitable for short to medium-term needs. They may not be ideal for long-term investing due to lower interest rates compared to other options. Notice deposits require advance notice for withdrawals, with potential fees for early withdrawals. Fixed deposits are like a savings plan with a set period and fixed interest rates, offering safety and higher interest rates than regular savings accounts. Money market accounts allow for investment in bank accounts or unit trusts with higher interest rates, but they may have restrictions on transactions and balance fees, such as initial investments of 20,000 rands or monthly contributions of 2,000 rands. When you put your money in a money market account, you earn interest on it either every month or once a year. These accounts usually offer higher interest rates compared to regular savings accounts. It's important to remember that no investment is entirely risk-free, and banks can be liquidated. Case in point is the VBS Mutual Bank, which started operating in 1982 and was liquidated in 2018. A debenture is a commitment made by a company or government to repay borrowed money, similar to an IOU. Unlike some loans, there's no specific collateral attached to debentures. Instead, repayment relies on the issuer's reliability and trustworthiness. Companies and governments utilize debentures to secure funds when needed, typically as long-term loans with fixed repayment dates and interest payments. Debentures often offer lower interest rates and longer repayment periods compared to other loan types, making them appealing for businesses. Investing in debentures carries risks for holders. Inflationary risk arises when the interest rate does not match inflation, potentially resulting in a loss in real terms. Interest rate risk occurs if market rates rise after purchasing a debenture with a fixed rate, leading to lower returns. Credit and default risks exist if the issuer lacks financial strength, though debenture holders are prioritized in repayment over shareholders in the event of bankruptcy. The time frame for investing in debentures involves committing funds for a fixed period until maturity, which can vary from a few years to decades. Investors receive regular interest payments until maturity, providing predictable income. Issuing debentures allows businesses to access capital without diluting ownership or pledging specific assets as collateral, supporting long-term projects or expansions. Individual investors should assess the issuing company's financial health and stability of interest payments. Tailoring investment strategies based on financial goals and risk tolerance is crucial when investing in debentures. A unit trust is like a shared investment pot managed by professionals. It's akin to pooling money with friends to invest in various assets like bonds and shares, overseen by a fund manager. Instead of owning specific parts of the pot, investors buy units representing a portion of the overall investment. Unit trusts offer access to a wide range of investments, including bonds, shares, and cash equivalents, allowing investors to diversify and spread out risk with expert management. Investing in a unit trust carries risks, such as the potential for the value of units or generated income to decrease. Unlike savings accounts, there's no guarantee of maintaining the principal investment, meaning investors could end up with less than they initially put in. The time frame for investing in a unit trust varies based on financial goals and risk tolerance. Some opt for short-term investments, ranging from a few months to a couple of years, while others focus on long-term goals, spanning 5 years or more. Longer investment periods offer greater growth potential, but may involve enduring market volatility. Assessing investment goals, financial status, and risk tolerance helps determine the appropriate timeframe. An endowment is a special investment plan lasting at the very least 5 years, offering tax benefits to affluent individuals and their trusts. It allows for unlimited international investment, aiding in diversifying portfolios. Similar to life insurance, you make regular payments to a company and they promise a significant payout later or to beneficiaries in case of unfortunate events, potentially reducing tax liabilities, especially for high earners. Endowments emphasize long-term saving, maintaining a 5-year commitment. Key features include flexible contributions, tax payment responsibility by the managing company, and investment flexibility, allowing changes during the period. Tax benefits include the company paying taxes on investments at a 30% rate, potentially advantageous for individuals taxed above this rate. Endowments can integrate into legacy planning and offer tax-free withdrawals after 5 years. Rules entail limited withdrawals during the initial 5 years, potential penalties may be incurred if withdrawals happen, and there is an option to extend the investment period for continued tax-free growth. Risk and return depend on investment performance and associated fees. In South Africa, endowments offer tax advantages for individuals, aiding in retirement planning or beneficiary provision. For businesses, they serve in executive compensation and employee benefits, contributing to long-term financial security. Equities, also known as stocks or shares, represent ownership in a company. Shareholders receive dividends and voting rights, akin to owning slices of a pizza. Equities offer potential for growth but also come with risks. Equities are subject to market fluctuations which can lead to losses. Company performance directly affects share prices. Historically, equities have provided attractive long-term returns, often surpassing other asset classes like bonds or cash. Dividends are a bonus on investments. For businesses, Listing on the stock market provides access to capital and visibility, but entails scrutiny and pressure. Individuals can build wealth through equities, but must consider risk tolerance and diversification. Offshore investing involves investing outside one's home country and offers tax benefits, asset protection, and privacy. It provides diversification, hedges against local factors, and access to global opportunities. However, it requires research and understanding of risks. Investing offshore can be part of a long-term strategy, providing access to different economies and industries, and should be considered within a diversified portfolio. Consulting a financial advisor is recommended to develop an investment plan tailored to individual goals and risk tolerance. Investing in fixed property, like residential homes or commercial buildings, is often seen as a pathway to wealth due to its financial advantages. Property ownership allows for borrowing against it, and it may serve as a hedge against inflation. While many focus on property value appreciation, the real measure is the return on investment, the actual profit earned from it. Thinking of one's home as an investment can be complex. Emotional attachment may lead to overspending, yet with careful management, it can yield long-term profits. Renting out properties has gained popularity, emphasizing stable rental income over short-term speculation. Commercial properties, such as offices and retail spaces, offer reliability and inflation protection, making them attractive to investors. However, investing in fixed property comes with risks and rewards, impacting both individuals and businesses. Market volatility, liquidity concerns, maintenance costs, regulatory changes, and interest rate fluctuations are significant risks to consider. On the flip side, rental income, capital appreciation, tax benefits, and portfolio diversification are potential returns. Property investment can stimulate economic development and serve as a hedge against inflation, contributing to wealth creation and risk management. In conclusion, investing in fixed property presents opportunities for wealth creation and portfolio diversification, but requires diligent risk assessment and investment planning. Both individuals and businesses must weigh the benefits and risks before venturing into this market. Collectibles are items that gain significant value due to their rarity and desirability among collectors. Their worth often depends on scarcity and condition. These items span various categories, such as coins, toys, comics, stamps, or antique furniture, and collectors invest time and care to preserve them. Although some see collectibles as investment opportunities, they're primarily pursued out of passion. While some collectors view them as diversification tools, they pose risks like market volatility, lack of liquidity, counterfeiting, and storage costs. Returns depend on appreciation potential and emotional value. Individuals in South Africa may invest in collectibles for diversification or hobby purposes, while businesses like auction houses or antique shops navigate market challenges and authenticity concerns. While collectibles can offer financial gains and personal satisfaction, caution and research are essential for both individuals and businesses entering this market. Pension and provident funds, along with retirement annuities, are key retirement savings options in South Africa. These workplace-based plans and individual retirement annuities aim to provide income upon retirement, offering various benefits and risks for businesses and individuals alike. Pension and provident funds, now similar due to recent tax law changes, are employer-offered plans that facilitate retirement savings. Employees contribute based on their cost to company, enjoying tax benefits and lower administration costs pooled by the company. Preserving these funds when changing jobs is crucial to retaining gains. Retirement annuities offer flexibility and broader fund selection compared to workplace funds. They can be owned by anyone, including the employed or self-employed, providing options to adjust contributions and temporarily pause payments in times of financial strain. Retirement annuities also serve as effective estate planning tools, exempt from certain taxes and fees. Investing in these retirement vehicles involves market risks and potential returns. Retirement annuities carry market risks tied to underlying investments' performance, offering competitive returns historically. Pension and provident funds face similar market risks, aiming for stable returns over the long term while considering regulatory changes and economic conditions. For businesses, offering retirement benefits can attract and retain talent, but involves complex fund management. Individuals benefit from securing their financial future through retirement savings, yet must assess factors like investment risk, fees, and tax implications when choosing between options. Aligning choices with financial goals and risk tolerance is essential for a successful retirement strategy. Lorato is seeking to make strategic investment decisions that will benefit both Zaba's future growth and the long-term well-being of her employees. Among the options she is considering are equities, endowments, pension and provident funds, retirement annuities, offshore investing, unit trusts, savings accounts, money market accounts, notice deposits, and fixed property. Equities, also known as stocks or shares, offer the potential for high returns, but they also come with a significant risk of stock price fluctuations. Endowments, while providing long-term benefits with tax advantages, may not be suitable if Lorato requires access to funds sooner for business expansion. Pension and provident funds, along with retirement annuities, are ideal for facilitating employees' long-term savings, but do not directly address Zaba's immediate financial needs. Offshore investing presents an opportunity for diversification and tax benefits, yet it involves complexities and currency fluctuations that may not align with Zaba's current objectives. Unit trusts, which involve pooling funds with other investors, offer diversification and professional management, albeit with potentially moderate returns. On the other hand, savings accounts, money market accounts, and notice deposits provide safe options with guaranteed returns but limited growth potential for significant business needs. Fixed property investment, while offering long-term value and rental income, requires a substantial initial investment and ongoing maintenance. Lorato carefully weighs the pros and cons of each investment option, considering factors such as growth potential versus security, employee benefits versus business growth, and long-term versus short-term objectives. Ultimately, Lorato devises a multi-pronged approach to investment for Zaba. In the short term, she allocates funds to savings, money market accounts, and notice deposits to address immediate business needs and emergencies. For medium-term growth, Lorato chooses to invest in unit trusts, aiming for a balanced risk-reward ratio to fuel Zaba's expansion. Additionally, she plans to explore setting up pension provident funds for employee retirement security as Zaba grows, thus fostering loyalty and attracting talent. For long-term asset building, Lorato considers fixed property investment for rental income and potential value appreciation. She also acknowledges the potential benefits of offshore investments for diversification once Zaba is firmly established. By carefully considering factors such as risk tolerance, time horizons, and the needs of both Zaba and its employees, Lorato crafts a diversified investment strategy that positions Zaba for sustainable growth and financial security. She recognizes the importance of consulting a financial advisor to further tailor the plan to Zaba's specific circumstances. So, Grade 12 students, as you embark on your financial journey, remember to arm yourselves with knowledge, and make informed decisions. And don't forget to check out the comprehensive study guide for this chapter. It's your roadmap to financial success. Thank you for joining us today.
Thank you for joining us for this lesson. If you learned something, please give this video a like, share, and subscribe.